Bitcoin is struggling to hold the $66,000 mark. The US dollar and gold are experiencing a slow sell-off, silver as well, and the US dollar is strengthening a bit again. At the same time, the bond markets remain under pressure, so the risks are still present, but Trump apparently is trying to interfere a bit, or rather to ease things up a little. Let's take a look at all of this, and with that, welcome to a new crypto update video. Yes, as I said, Bitcoin is struggling to hold the 66,000 US dollar mark. We've already dropped below it again, just in the last few seconds, and also last night down to 65,000 US dollars. Yes, the markets are struggling at the moment, not just the crypto market, but also the stock market with the possible AI bubble. Software stocks right now aren't exactly the most profitable ones in the market. And that's, of course, a point. If we start to see the AI bubble, or let's say the software bubble, begin to burst in the stock market, then things will obviously get significantly tougher for crypto as well. Before we get started, as always, feel free to leave a like on the video and subscribe to the channel if you haven't already. And of course, feel free to join the free Telegram talk and signal group. If you're interested in updates, news, and signals, you're more than welcome to join. You'll find the link for that for free down in the video description. And if you're still looking for an exchange where you can trade all of this and also secure yourself a bonus of up to 11,500 USDT, then feel free to sign up with my partner exchange, WEEX. The link for that is also down in the video description. So I'd say let's jump right in, namely stocks. Retreat, asterisk, mood source, gold rebounds. So the risk in the markets in general is relatively high. S&P 500. I'll just throw this out there a bit in advance. You know, towards the end of the video, we always take a look at the stock market, but the S&P 500 started off yesterday with another clearly red day, and the futures are also in the red for now. Why is that? I just mentioned it. The risk that software companies, or rather the AI companies, are currently facing is very, very high. Why? Google had very, very good numbers. But at the same time, Google also issued a 100-year bond and wants to raise another 20 billion. That's the kind of money they're looking to raise. Why are companies doing this? Because in the end, we're not getting any interest rate cuts, and that's likely to remain the case until July. Then there's Walsh, who might want to tinker with the bond markets and set bond yields at lower interest rates. So that means Trump could then refinance the debt, which I believe is now at 40 trillion, more cheaply. Debt, which I think is now at 40 trillion, could be refinanced. But at the same time, this would also confirm that the Fed is no longer truly independent and is doing what the president says. Those are the negative consequences. As I said, for the current situation, Bloomberg writes here, software stocks are now trading like banks in 2008. Wow, that's quite a statement, because we know what happened to the banks afterwards, some of which crashed by 10, 20, 30% in a single day. Not really good. Asia has performed well so far this year, but I'm concerned about the correlation to global markets and a tactical unwind. That's exactly the problem that we're now slowly starting to see spill over into the crypto market as well. We're at a point where, as we know, the money first flows out of the crypto market, then out of the no caps, and then out of the large cap stocks. Unless something changes globally soon, that means uncertainty is the issue. Whether it's Iran, the USA, or carry trade, in my opinion, the bond markets are still completely over leveraged. So the short-term ones, the 10-year bonds, so to speak, short-term in quotes, the 10-year yields are dropping slightly, but the 2-year yields are rising. That means we're slowly seeing an anti-correlation develop, and that's not good, because when the shorter-term yields rise higher or faster and the longer-term ones fall, we know that investors, or rather, yes, investors, are a bit concerned about it. What's going on over there in those countries? Then ultimately, we see the same thing in the US. Sure, the bond markets have pulled back a bit, but the more short-term the bonds are, the higher or more stable they are, while the longer-term ones are falling. So here too, we have an anti-correlation. So Trump just came out about half an hour ago. I wanted to read this to you as well. On Twitter, President Trump is planning to scale back tariffs on steel and aluminum goods. That means he apparently wants to dial things back a bit when it comes to tariffs, okay? He seems to be working on bringing a bit less geopolitical uncertainty into the mix. Yesterday, Netanyahu made a statement, okay, maybe there will be a deal between Iran and the USA, but nobody knows what kind of deal that would be, whether it's really just about nuclear weapons or if it's about something else entirely. But you also don't hear anything from Iran anymore in the past few days, so still uncertainty until the issue is off the table. Bitcoin, 66,000 US dollars. Nothing changed compared to yesterday, I would say. For me, it's still rather interesting. The WIG. Why? We still have a lot of liquidations ahead of us, I would say. Plus, there's a large cluster that has just formed at around 55,000 US dollars. We've never been in that area before. but there's significantly more there than we currently have up here almost. So it's a very, very important anchor point. The next chance to the upside would be 72,000, but that doesn't necessarily have to be reached now. That's important to me, that we pick up this wick down here, see a consolidation, and then possibly start a relief rally that could also be more long-term. At the moment, we're just moving with zero volume. Nothing is happening. But that could change today at 2:30 p.m. because the CPI data comes out at 2:30. If it turns out higher, we've got a big fat problem. Because then the topic of interest rate cuts is completely off the table for now, probably even for the whole year, who knows. And we have to pay attention to whether the inflation numbers are complete. That means if they're higher, we're screwed. If they're incomplete, we're screwed. What if they're lower? And if they're missing a bit, like we saw in November and December, we're screwed. So the best case scenario would be inflation drops, the numbers are complete, and then the markets could rise because in the end, oh, we don't have any more inflation after all. The question is, how much have those baskets of goods changed again? But we'll know all of that at 2:30 p.m., so please be careful. But otherwise, there really isn't much news expected today. Let's take a quick look at the spot order book. What does it look like at the moment? Overnight, there was actually a bit more selling again. Yesterday, I was still speaking positively about the fact that a lot, around 30 to 40 million, was bought on spot throughout the day. Now, overnight, that has noticeably decreased and the sellers have increased a bit again, but it's not really dramatic yet. The current bias is simply that a lot of bids are coming in, meaning a lot of buy orders, and that's a good thing for now. That doesn't mean it's the bottom, but people are still buying. That's called DCA. Otherwise, there's not much to say about Bitcoin at the moment. Let's move over to Ethereum. Ethereum, same story here. I've now made the buy zone gray because, as I said, all orders in this box have been picked up for now. I've marked a new gray zone, but that's more intended for longs for me. Here too, below the wick at $1,737, I would like to at least fill this wick, maybe even go a bit lower. I'll show you why in a moment on the daily time frame. Here we can see it, another larger inefficiency, and after that, everything would be taken care of for now. After that, it would be back to $1,300, and then we could even head toward $1,100. So for me, this is short term now. Support here. If that holds, things look relatively good, and then we could also talk about a relief rally here. But theoretically, it could still take a few more days, maybe 12 days until Nvidia, or we might get a complete market flash crash. Who knows, before we can really start a sustainable relief rally. Solana, there's really nothing to talk about there either. The altcoin market is probably the most uninteresting market in the world right now anyway. All right, let's move on to the traditional markets. We'll start with the Forex trades USD. Currently at 97, slowly rising again. What does that mean for USD JPY? Consolidation, so the dollar is rising, USD JPY, or short position. Stable, but somehow it's not really working properly. So it's a really, really strange market. Euro against the US dollar is slightly declining, but a strong dollar again, which actually isn't really that good either. But all right, that's fine by me. As long as our USD JPY keeps tanking, that's exactly how it needs to go. Then gold. At the moment, since there were questions yesterday, is this it now? Is this the time for the big crash in gold? I don't think so, but I do think that the uncertainty is currently being deliberately removed from the market. What do I mean by that? That means we're seeing a few slightly more positive news items everywhere at the moment. Sure, we're getting the CPI data. Whether that's actually positive is another question. But gold is completely over-leveraged. Silver is completely over-leveraged. One wrong piece of news, and the whole thing just crashes back down, just like we've seen before. In my opinion, a bit of risk is being taken out of the market right now, also because the volume is clearly declining. That means, for me, the market is just completely over-leveraged. If that was the top, then we've got a textbook A, B, and the C would take us down toward $3,800. That would be a clear buy zone for me. But I don't expect that to happen right away because I think the uncertainty just isn't going to leave yet from the market. As I said, the bond markets, and then there's still the whole AI topic where the numbers or earnings were relatively poor at this point. There's just too much simmering for me to say that gold is taking off. The only thing that would really make gold take off, in my opinion, would be a complete market crash. Why? Because the money would flow out of the markets. And then I would say to also flow out of gold because people need cash, because they can't get rid of their stocks anymore, so they sell gold instead. Gold drops or they close their positions in order to have cash again, so they might be able to buy the dip when everything is back at an all-time high. That's kind of my logic at the moment. The same, of course, also applies to silver, which I think, again, yesterday dropped down by 7 to 8%, but still hasn't reached my target yet. So patience is needed. Just try not to trade right now. Stay on the sidelines. You'd be better off shorting the stock markets. Speaking of stock markets, DAX dump, Dow Jones dump. And I already said it yesterday in the live stream. It's always the same picture. New all-time high, consolidation, wick taken out, and then it drops. That's the pattern we've been seeing for weeks and months. Can someone tell me what's bullish about that? There's nothing bullish about it at all because best example, think of Bitcoin. Bitcoin is the best example. For months, 5 to 6 months, it's been all-time highs again and again. Everyone shouts bullish, everyone goes long, Manu shouts bear market, everyone laughs, then dump. We're basically seeing the same game now with the big tech stocks. Nasdaq, same game if we look over there. How long has this been going on now? Okay, October 25th, if we take the whole range, let's say. September 25th. New all-time high, dump, new all-time high, dump, new all-time high, liquidity, 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 retail buys, buy, big players sell, 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 dump. And that's what I'm still waiting for it to crash a bit more. At the moment, we're at least no longer able to form a higher high. Even here, the all-time high was only narrowly missed. S&P 500, same game. Our sell zone is basically always our short zone at 7,000 points. Again and again, it pokes into it and is immediately sold off again, so here as well. At the moment, at 6,811, it's the same game again. If we get a lower low here, and we actually already had that here with the small structure break, in my opinion, because we also haven't formed a new all-time high. This could now be the moment when that rollover happens. If today's inflation data turns out to be crap, if that turns out to be the case, then the markets would probably completely crash as well. Volatility index heading back toward 20 and rising slowly but surely. Keep an eye on that, especially if we get into the range of 30 or even higher. All right, then I'd say that's it from me. Oh, maybe one more small bias. Coinbase earnings weren't really good. The earnings were down 350% and revenue was also down 1.48%. Wow, what a shit show. But all right, let's wait and see. Otherwise, that's it from my side. Thank you for watching. Next video either tomorrow or then on Sunday for the live stream. That's it from me. Thank you for watching. Leave a like, subscribe, join the Telegram group. And with that, I wish you all a great start to the weekend. Until then, ciao, ciao, and as always, stay crypto.